Great, great. So, uh, welcome. So, guys, we have today Sanjay Enshetty with us. Sanjay Enshetty is MD and CEO of 50K Ventures. 50K Ventures is a early stage venture fund. They have made close to more than 20 funding so far. Sanjay?
A little more than that, but maybe I should update my profile. Now I'm not associated with 50K. I'm part
Yeah,
of.
you moved to you moved to a new fund. I got the update, but yeah. So what's the new fund name, Sanjay?
Sahasra. Sahasra.
Sahasra. Okay, great. So as part of, but I could see your partner also. He's also a partner here, na?
Yeah. So we both are partners, but we have new LPs. The complete investors are new folks.
And your portfolio, but that is intact. So you have deployed your full fund from.
Exits also happened. In LPs got their money back. That's why we floated a new fund. This is a second fund with the new investors.
Wow. So you have taken full advantage of a lockdown.
Yeah.
So great. So
So Ankur Sanjay has moved from 50 to 1,000 now.
Yeah.
Sahasra is 1,000, right? So from 50 to straight to 1,000, that's
Oh,
Sanjay's
achha,
movement.
wow. Great. Someone has made a progress. So Sanjay and I, we now know each other for 5 years. Sanjay obviously has been a very active participant of startup ecosystem. You would find him, obviously, when things were great. You would find him in all the events, in all the pitch sessions, because that's what his job is, to find the new startups. Uh, so I'm, a very good friend of mine. We keep on, whenever he used to travel down to Delhi, we used to meet. When we go to Bangalore, we catch up. So I've been requesting him to give some time to us for last 4-5 months. He has been very busy. He started 2-3 companies. He has started one more company. I am again forgetting the name, where he is acquiring or helping companies to get acquired. It's an acquiring business.
So I'll tell you the story why I had to start that business, because if before that, let me give a brief introduction to most of you. So I got into this VC world in very accidentally in 2010, and worked with a fund for 3 years, and then started the 50K Ventures with another partner in 2014. Being in Hyderabad, we always had a disadvantage of exposure and not being recognized for what we are doing. That's where I started moving out of Hyderabad, traveling across the country to meet startups. As Ankur said, yes, I was very actively traveling, participating in a lot of events just to meet startups, to learn what kind of startups and find good deals for my fund. And that's why we could invest around 27, 28 companies in last 7 years. And we had good exits, both in terms of closing the companies and also making money through few companies. We are left with 4-5 companies in the previous fund, and with the 7 years of experience, gone through a lot of challenges. So let me tell you very clearly that investors doesn't mean that they always have a very luxurious life or comfortable. It's only the glamorous part, but actually there's no much difference between the investors and entrepreneur. You pitch for money, we also pitch for money. So you have a responsibility, we also have a responsibility. Only thing is, like, we are like in on the slightly top perspective to see various deals to invest, and we look at multiple companies as you look at single company. So there is no much difference between an investor and an entrepreneur. Same go through the same path, same journey, same success failure stories. So that's why I say, like, when an investor and startup talks, it's a discussion between two liars. Both keep giving false hopes to each other, and that's how it works. It's a belief, right? I believe in you, you believe in me, and that's how we have to move forward. So that's an interesting journey since last 7 years. And after the first cycle has done, seeing few successes and learnings, that gave us an opportunity to start the second fund, Sahasra. Sahasra is a little more focused towards SaaS ventures, because last 2 years we got an opportunity to spend more time with SaaS companies, and that's where we could contribute in terms of their growth. And today I'm more comfortable working with a SaaS company. And if you see, most of the companies are moving towards the SaaS models, and that's where the opportunity is going to pick up over there. And that's why we named it as Sahasra. You can maybe 1,000, or we say it's an infinite loop as well, right? Sahasra is a multifold. And now from here, there should not be any looking back. And that was the idea. And we named it as Sahasra. And it's been just 5 months old fund. We officially announced it only in March, but we were working since last November. And because of whatever we have done in the past 50K, the credibility, we were able to get good LPs for this fund. This is a small 100 crore fund and plan to do 200 crore in next 2 more years or 3 more years based on the kind of investments what we do, I think. So coming to my other personal venture, I named it as Startup Login. The idea is like, again, in my portfolio, quite a lot of companies were struggling. It's not necessary that every company had to be successful in terms of exits. That's not the case, right? And especially, I'll say like entrepreneur life is not an easy life. And you all know that you're experiencing every day. You have to be prepared for various surprises, deal with uncertainties. A lot will happen, right? Until and unless money hits your bank, you can't count it as a sale or investment has come. It's all entrepreneur lives in that kind of hope and belief and makes it happen. So I always say entrepreneurs are again like a new age freedom fighters fighting hard to solve the problems of the world. And that's where they believe very hard. Even entire world is against them, saying that this is stupidity, but they say like that's what we want to prove it. And that's why many people succeed. And irrespective of not having a monthly checks, fixed income or profitability, still we do that, still we go ahead and do that. And most of the cases, first thing, your family and if you're married, your spouse don't support you because there's always a limit, right? An entrepreneurs always cross the limit when it comes to sustainability because it's not an easy journey, right? So during that time, what happened? A lot of startup founders struggle and they have challenge. But I say like failure is nothing. It's not wrong. Don't feel bad if you fail because sometimes failures need to be celebrated because it's an amazing learning. So that especially if you are engaged, if you're below 30s, if you failed, then I say congratulations because you learned a lot. People after 30 or 40 still trying to fail, they're not getting the opportunity over there. You got, that means whatever you're doing next, you'll do amazingly well. So that's where you need to be optimistic and looking at that. So startup login is all about trying to find, I won't say failed entrepreneurs, I won't say struggling, but I will say entrepreneurs who are seeking early exits. We help them to exit. Again, exit is nothing but find you a better home, bigger home where you can still achieve your goals and vision under a bigger umbrella. So we work with
पिंटू
large
भैया
unicorns.
तेरे मोबाइल से
So
कॉल लगा तो
One sec. I'll mute.
yeah.
really sorry I just muted myself sorry
Can you just unmute yourself? Yeah, I muted everyone.
Okay.
Yeah.
Yeah. What I'm saying is like we work with unicorns and large corporations to help them acquire startup products, startup teams, and various things. So because all these 7 to 8 years, we build a lot of know because we review so many technology companies' products. That's where I felt there's an opportunity. So as an entrepreneur, we came up with this idea. Now today, we also consult some large organizations on innovation and technology. So we understand the problem statements and we connect to the startup who is working on those solutions. So right now, I'm the consultant to Deloitte and a few other large corporations because these people are having complete no exposure towards startups, no exposure towards innovation and technology. So that's where they want us to help them on their problem statements to connect to the right startup solution so that they can become a customers or they may acquire or they may use the solution for their own need. So this is what we do. I do full-time fund, part-time my startup, which again in the same space where I figured out an opportunity. So I say like when you're trying to solve problems and when you have a solution, why not commercialize it? So today startup is all about making money. It's not just you're trying to solve a problem, right? It have to have some kind of commercial element. I say it's a journey of wealth creation. Wealth creation includes your employment, your actual financial capabilities, plus contributing to the economy, various things. That's a wealth creation is what a simple word to use for any startup to be part of its journey, right? So this is all about me, and I think today Ankur was asking me to address you guys, and I think Ankur also is doing amazingly good job by Hostel Fund. I like that concept because I remember in 50K Ventures when we started in 2014, the first three companies which we invested were college students or just passed out. Actually, 50K Ventures started with an idea that we'll fund $50,000 with very early stage MVPs. We want to only fund MVPs to take this money of $50,000 and go into the market. That was the idea. So we did first four companies in student startups only, and unfortunately, none of them could make it. It was fine. We took that call, and then we realized why they couldn't make it. So there need to be someone, not just money, also some kind of person guiding them, advising them, and holding them to utilize that funds in the right direction. Because someone starting very young, it's understood they have that energy and skill, but not the experience. That's where someone with some experience and that market connect should help you out. And that's where I said, Ankur, I think this was highly needed. If you see in India, there are not many. I don't say many. You can't even. There's not even a number of funds which are focusing on students. I think you're one of the very early, right? Only 2, 3 campus fund, hostel fund, and 3, 4. That's not more than that. I feel that is where the risk is very high, but again, the opportunity also is there in terms of like if that energy is utilized in right way and mentored in the right way, definitely it's going to become a good success. But someone have to do that, right? You can't keep saying that it won't work. That's where Ankur has took that path. I know he himself is struggling for a lot of things, but he's always in full energy to do that. And it's been 1.5 year, Ankur, hostel fund.
Yeah, more than that. So we
More
started
than
in
that.
last lockdown. Yeah, we started in March 2020 full time. So, but we have been very proud of ourselves. We have evaluated around 1,000 student startups, and now funded 5 of them. Um, Incubated around 70 of them. But yeah, and more proudly that we now see at least 2, 3 of them focusing on student or maybe early, recently passed out. So yeah, things are going pretty good.
Great. That's highly needed. That's what I say. A lot of students even come to us. But unfortunately, because we look at slightly matured ventures,
Yeah.
so we may not have the time, though we want to spend time because spending time with the student ventures, it needs a lot of energy and also patience in the both the sides. So that definitely need a different mindset. So I think Ankur has that, and I think he's creating a large impact in that segment. And I'm sure, like in the future, I'll definitely join you for sure once I feel that I'm little done over here because I always like to spend time with young minds. So when you're even growing, the more you spend time with young guys, right? Even we get very active. The mind is
Yeah.
always
Yeah.
in that kind of mode, right? Great. So this is what we do, and how do you want me to talk? Like any
Yeah.
specific
So Sanjay,
questions?
so yeah, no, so I think for the next 5-10 minutes, if you just set because as I gave you a brief that a lot of our audience is also a mature audience, who have already jumped into this entrepreneurship via the college incubation where they're part of, or some of them are thinking of it. So the idea is a couple of things. One, which is a lot of times the questions come to their mind, what does early stage investor like yourself, whose check size is anywhere between 50 lakh rupees to 2 crore, they look for? What are the opportunities? What are the do's and don'ts? If you can just spend five, and maybe from your experience, what worked, what did not work, some case,
Yeah.
and then we can open it up for a bit. I just want to make it to be interactive. Then maybe last 30 minutes we can answer specific.
Sure, definitely. So today, let me give the current scenario. Again, when we started in 14, the VC and investment ecosystem was very, very nascent, right? There were not enough investment opportunities, and a lot of startups used to struggle in other way around. But today, the entire dynamics have changed. Today, there's so much of capital available in the market, and today it's other way around, right? Investors fight for the deals, which was not the case earlier. Today, investors chase ideas, investors chase startups. Earlier, startups used to chase investors and used to be that felt door of investors. Today, investors knock the door of startups because the entire scenario has changed right now. So again, every stage of investors have a different approach towards looking at a company. But right now we are talking about the early stage. Let me stick to that early stage and also talk a little bit about later stage, what will happen. So early stage, see, one thing you need to keep in mind when this is one thing I always say, don't ever run to an investor when you find someone anywhere. It could be an event, anywhere. So you should first ask yourself, are you ready to meet an investor? Because when you meet an investor, that's an opportunity. Opportunity you get once either to impress or not, right? So what really excites or impress an investor? Let's talk about that. Okay. Uh, and as I said earlier, any investor is putting money because he believes in the potentiality of that idea about that market, and ultimate goal is, will I make a multiple return on that investment? That's the basic, right? That is the simple fundamental why someone is putting money. No one puts money as a charity, no one puts money as the sympathy and all. It's purely business. Keep that in mind. It's a business world. If you are coming to me and say that I'm going to multiply your money 10x, 20x, that excites me. If you say you give me money, I will grow the business, no one get excites, right? You come to me and say that I have a AI solution, that won't excite me. But you come to me and say that I have a solution which will change the world and will make a lot of money, that excites me. Keep the entire pitch have to revolve around how it can change. And the fundamental thing in mind is you have to think before putting the entire pitch deck onto the paper, will this excite investor because of the numbers, the metrics, right? So primarily there are 5 to 7 things, parameters you need to keep in mind, because this is what investors as a checklist on. Check, this matches the criteria, then the excitement and interest keeps on increasing, right? The first one is the overall your business idea, right? What is that idea all about? Idea followed by what problem are you solving. Sometimes there are problems which need not have a solution. They are fine to have a simple solution, they need not have a innovative solutions. That's why how pressing is the problem matters. Pressing problem has more need because people are struggling to have a solution. That's where people want to pay for the pressing problem. So you need to know the problem is a normal problem, ordinary problem, extraordinary problem. If it's extraordinary problem, that's where your impact is more. That's important. What problem are you to solve and how pressing is that problem? Next, the most important thing is the team. If you ask me what I look in a entire startup, I only say first thing, team matters the most. I say I put money invest in people, not in the company, and people build the company. That's it. So your team, your co-founders, your immediate subordinate employees, teammates have to be very, very choosy and picky. I see a lot of people as a startup. I know it's a financial challenge to hire big people, but if you can sell your vision to the right people and say that this is how we are going to build it, I think with that excitement, a lot of people will come forward. So team matters the most. Sometimes it could be the pedigree, it could be the past experience, it could be the subject knowledge, it could be the technical knowledge. So basically, a team should know what shit are they getting into. Do they know in depth of their industry or not? That matters. That means, see, whatever questions happen, it happens around the industry or about the product about you. That means you should know your entire knowledge about that industry, competitors, everything. So team matters the most. And again, team, make sure that you have a good combination of team, right? Sometimes what happens, there's this awesome tech product. Enter all the co-founders are techies. If everyone is techie, then who will understand the business? Who will understand the marketing or other aspects, operational aspects? So definitely the very high chances it may fail. I have experience a lot of such kind of companies who are complete tech driven. Even when they sell to the customer, they sell technology, not the business. That's why they fail. So I know a lot of people come and say, we have an AI solution, we have a blockchain solution. As a layman, customers are always laymen. They only want the end problem to be solved. Whether you're using blockchain or AI, doesn't matter. Or is your solution helping me solve my problem or not? That means you need to sell the solution for the problem, not the technology. Technology is only a subset of what you're selling. That happens only when you have the right kind of team who are understand that sales ability, right? So team, not necessarily your co-founders, right? Sometimes you may also bring in subject matter experts. So that matters the most, because a person feel that I'm putting my every rupee I invest in the company is valuable because of the team, right? That confidence has to be given. Third parameter is the business model. What is the business model and revenue model? Both are go along, right? You say my business model is subscription model, my business model is a B2B, B2C, my business model is what per product, whatever it is, right? And revenue model, when you say subscription, what is you're going to plan to put your pricing and a lot of things. So this both need to be given a very clear criteria. This is my business model, this is my pricing model, right? That is a third parameter. Fourth, again, an important aspect is the market opportunity. Today, again, investors are very, very particular about the market opportunity, especially for early stage investors. Is if I put a money, okay, before that, a step before, if you see, startups are all about growth, valuation, and multiple rounds of fundraising. That's where the early investor will make money when the next level investor will come and invest it in next level valuation, right? The next level investor will come and invest in you only if he's convinced that it has bigger market, so that again the later investor will come and give him an exit. That's the game is all about. Understand that. You also have to understand the overall psychology of investor, an entry level to a mid level to a later stage investor. What are they looking at? The company will grow only if the market size is good enough. So early stage investor puts money, picks up a stake because the market is big. It have to grow. If you achieve certain metrics in terms of customer acquisition, next level will guy will come and put money at the higher valuation. That's where my value has increased. The same thing, it's a cycle. It happens until and go to an exit. The same mindset happens. That's why market opportunity is very, very important. What markets are you operating? What is your opportunity, your TAM, SAM, SOM you need to work on? And it have to be, don't go with what KPMG has said, what Bain and Co has said. No, you need to you come with your own metrics on arriving at market opportunity, right? For example, if you're talking about an education institution, right? Someone will say it's $1 billion industry. You can't take from the internet and put $1 billion industry, education, edutech, and this thing. No, that doesn't work. You're just only trying to copy and paste and sitting. You need to go a little more depth. Why it has become $1 billion industry? You have to take a sample size. If required, you have to talk to your competitors or some other and get the data, and then you will be convinced how much market opportunity in that, what would be your addressable market, and in that what would be your achievable market. This level of research is highly needed. Once you do the research, then your market size and opportunity figure will be exactly clear, not matching to what the big four says, but as per your research, right? That also gives you an in-depth knowledge whether is it the right market are you operating, is it exciting enough to do it. Then you will know whether I need to go for investors or not. Sometimes you need not go to investors because you'll anyway become, you can achieve that number and you'll become profitable. You can bootstrap for long. So once you know the right market opportunity, you know at what stage you need to raise money till when you can bootstrap by acquiring what kind of customers, right? So that falls in a market opportunity. Then the fifth parameter is your key metrics. And it's a key metrics. What's your acquisition cost? What would be your LTV if it's a kind of SaaS business? What would be your overall other key metrics in terms of average revenue per user or per customer? All these metrics matters the most. For that, you need to take a sample size. In the sense, like you first go to few customers, a validation mode, right? You find around 5-6 customers, then you know, okay, to acquire this customer, how much cost I incurred and how much this customer is paying. Is it going to be a break even? Am I making a loss or am I making in more money over a period of time by spending this acquisition cost? Then you will know, are you in the right model or not? Again, this comes back to your business model and your revenue model. We can be changed based on this validation. So your key metrics validation gives you a complete scenario about, are you in the right business model or not? So this all dipstick test you need to do first, even before going to investor. If you're convinced, then you go. That's why I say investor opportunity is very important. You just cannot run because he's there. You're missing an opportunity. And most of the cases, investor will disappoint you. Keep that in mind. Don't think that he'll get excited and he will encourage you. No, investors will never encourage anyone. Investors want to filter startups by various parameters. It's like same interview process, right? You have 10 candidates to come to one candidate because the only interview is not about selecting, shortlisting. Interview is about eliminating. The same thing. How can you eliminate more number of startups who are applying because it doesn't match my criteria, right? So same thing, you need to be understanding about your own business, industry, competitors and all, right? So that's the fifth parameter about your key metrics and refining the entire model. Sixth one is again your competitor analysis. Who are your competitors? Where do you stand in terms of your landscape, the overall lay of land you have to put, direct competitors, indirect competitors, who could be a potential competitors. Today, competitions can come from anywhere, right? For example, today, Paytm calls itself as a bank. Airtel calls itself as a bank, and a lot of small companies call themselves as neo banks. What is this? No one, banks are a very large institutional organization built over years, but today people say I'm a bank. How is it possible? Because Markets have changed. That's where things are happening. So who knows, the new banks are the new competitors for the banks. NBFCs are also eventually becoming competitor to the banks. So these all are competitors. You should know who's your direct competitor, indirect competitor, and where do they fit in. And you should also know a little more depth about your competitor. Today, a lot of data is available online. You know their numbers. You can go to Zobacab and find what is the last year financials they filed. You can go to Crunchbase and you can look at their entire history. Who are the people associated? What kind of investments they raised? How many rounds they raised? Who are the investors invested in them? That insights will help a lot in terms of refining your pitch deck. So you need to spend a lot of time on understanding your competitors, their insight, their financials, their pricing, and also why they failed. So a lot of people on overview level, they try to talk about competitors. I'm the best. Someone puts a slide, right? They say X, tick, 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 that I have all the features. Are you kidding me? So their people have raised a lot of money. They have so many features. How can you be best them? You're still in MVP stage. You're saying I have all the features that guy don't have. Why do you think that guy didn't have that features? Not because he's not thinking. He has money. He hired the best people to put that. And you think that I have the features he doesn't have. There's a reason behind not having those features. You need to understand why this guy didn't come, right? So there's one more common question comes, right? They say like Geo will start overnight my model with their kind of thing. Google can start this overnight thing, right? They can't start. It's not that easy for large organizations to start something small, right? So this will have, you understand, only you have an in-depth understanding about your competitors and below their landscape and a lot of insights. So once you have that, then you put the overall analysis, then you say what better you can become than them, right? Today, the competitors are already in much more mature stage in terms of the revenues, the fundraising, but still you say like, I'm better than them, but you can't say that until unless it's validated by customers and customers have to give that feedback, right? So that validation and the competitor analysis is very important. Spend a lot of time on that. And again, always be open to pivot. If you think after doing this all tests of your analysis, your business model validation, customer validation, somewhere you feel that it's not working, don't shy or hesitate to pivot or change the model. A lot of people think that no, it's going to work. Don't be adamant in your mind that no, I'm going to make it happen. You should be realistic and understand the ground reality. If it is not working for him, why it will work for me? You are not something doing an extraordinary in a very early stage that they are unable to do it. So pay attention, be very pragmatic in terms of your approach, and anywhere you feel you have to change it, you have to change it. Don't hesitate about it. Pivot it, scrap completely, and start from the beginning. That a lot of people don't do that, and that's why they fail later stage. Failing later causes more damage than failing early. So fail safe, fail fast. We say that failing fast will help you fail safe also. That means you have mitigated a lot of things. Be open for that failure and pivot. Nothing to you're going to lose initially if you fail. But if you're going to fail later stage, you're going to lose a lot, right? So that's one thing. Competitor analysis. Then comes your overall your financial projections, right? So how much you can achieve in the first quarter, second quarter, third quarter. Don't worry about 5 years. No one knows what's going to happen next year. No, before pandemic, everyone were on the full high spirit that we're going to achieve this. But it's a great lesson that things we don't know what's going to happen tomorrow. So reduce your goals, right? Your timelines. Don't think about 5 years down there in projections. Think what's going to happen in the next 18 months. Split that into 6 quarters, right? Quarter by quarter you put it. Next 2 quarters, what's going to be your realistic achievement in terms of how many customers you're going to achieve, how many revenue you can generate, what features and roadmap you're going to do it. So your projections and also your roadmap, your product roadmap. So I always say when you're in early stage, don't waste your time in building the entire product. That's the one big mistake a lot of people do, especially if you're a tech startup. Don't spend a lot of time in building the entire features of the product. That is a stupidity, right? MVP is the best approach. Minimum viable product should become MVSP, minimum viable sellable product. Your MVP should be MSP, and your MVP MSP should become MLP, most lovable product. Then after the third stage, when you come to MLP, that's where you start building other features. Till then, don't even think of building a new feature by which you are validating in early stage. Even if you fail, you can just drift or pivot it very fast. But if you spend so many months building all the features and then you realize the product market fit is gone, finish, you're dead. So that MVP is nothing but your product market fit. It will help you build an MVP of the first three features, make the product market fit. If it is working, what is product market fit and market product fit? Both are important. Someone is coming and saying that, okay, I'm willing to pay for it. I'm willing to pay for it. I'm going to use it, giving a consistent feedback. And market product fit, coming and searching for a product like this. I have my problem. I think this will solve me. So very important. Product market product fit. Both have to be evaluated, measured, right? Then think MVP to MVP to sellable product to lovable product. These are the three metrics you have to keep in mind. And constant feedback from the customers. Talk to your customers. I'll give an example. We invested in one non-tech company called LD Snacks, company called Evolve Snacks, a Delhi-based company. So food, right, always have a challenges, and obviously there'll be a lot of critics online, and people were doing. So what we did, like we picked up around 20, 30 customers who gave that slightly lower rating or some kind of remarks on the company. We reached them out. We created a WhatsApp group, and we discussed with them, hey, what changes you want to make? What did you felt while opening the pack? What was the first impression you got? Hey, we are coming up with a new product, and we send them the samples. Give us the feedback. Today, you go to Evolve Snacks YouTube, Facebook page. There are some videos. Customers made those videos. We never made the video. Customer opened the pack, like unboxing. They kept the products on in the bowl, and they made the videos. We were surprised, actually, YouTube videos. And that is the best way of getting a customer feedback. Unfortunately, in 1 year, because of the lockdown and other things, the sales have come down because we had pandemic, then we had the farmer strike, then the supply. Still we are doing good, but we couldn't reach our targets which we had. But that was a good learning when we tried to bring the most critical customers and disappointed customers together and empower them by asking them on the feedback. Trust me, they're going to help you build a better product. It could be tech or non-tech, and they're going to evangelize. That happens with every company you did, and we practically experienced that. So because initial stage, you know what the customers, constantly talk to them, make them be part of your decision making, make them involved in your discussions initially, in your drawing board discussions. Say, hey, we are doing a small brainstorming on the features. Would you like to spend some time? And he's a customer. He will give you more feedback because he's not only going to participate actively and give you inputs, but he's going to talk to 10 more people that how this company involved me in their process. That is a zero marketing cost, and with a better product, and that's where it will become the most sellable product to a lovable product. This is something you need to keep. No one will tell you these things. It all comes only through practical experience, which we also learned and did with our portfolio, and that's why I'm sharing this. It will work. Zero cost, only time, investment, and engagement. That will take you, right? This is important, right? Then comes your the final thing is your overall how much money you want to raise, why you want to raise, and where you want to use that money. Be again very particular about that. Don't ask money because investor is that jo mangna hai mang lenge. A lot of people do that. Arey ek baar mang rahe na so zyada mang lenge. So that's not the case, right? You should be very realistic why you want, because taking money is a responsibility. It's not a celebration, right? You have more responsibility and you're answerable because someone is giving you money, the trust and belief. That means you need to handle it, use it in a very consciously, and you have to make right use of the money when money comes, right? So you should be exactly sure about what is your need and put a 30% of a buffer to that, a little more hike on that, and ask that much. Don't ask half a million when you need only $100,000. So be realistic. You need $100,000, ask 150K, so that at least you get 120, 130K. And with that money, in a very conservative way, initially spend it. Every feature have to be have a measuring, every investment or every outcome have to be measured, whether it worked or not. That level of involvement you need to do it. That's where you will see a better outcome and the growth. Till then, I don't think. And again, a lot of people when they raise money, they will try to get a very experienced resource, paying a huge salaries. When you didn't have money, you were trying to convince a guy with a low cost, the best guy, with your vision and all. You have to do exactly the same thing. You don't say that I have money, मैं ज़्यादा दे दूँगा. The person who comes, he will go to other places if someone is giving more. So you need to find the right people over there. So extremely should be conscious. That's why I say the first round should always raise a smaller round. When you raise a smaller round, you also have a worry that you have to build the features fast, take it to the market, get customers, show the growth metrics, and raise another round with a better valuation. That should be your journey. Not that when I'm raising one time, I'll raise more and no clue where you're going to spend that money. I'll hire 10 developers spending 1 crore rupee. That is a very wrong plan. again, this no one will tell this. Again, it comes only with experience, and that's why I'm sharing. Be very cautious about what you want to ask. And when you are asking to raise smaller money, now you can raise fast as well, because you know exactly how you can control the cost and build it. And investors also have the confidence that okay, this guy is asking less amount, he want to prove, and they also don't hesitate to give that money. So these all are small aspects where you need to keep in mind when you're raising money, and all this happens when you know exactly what you're doing. And the final piece, I think it's a ninth or 10th parameter, is definitely someone is putting the money thinking he's going to get an exit some point of time. How is going to get back his money? So a lot of businesses don't have that exit strategy, are stuck. Investors are stuck because the money is stuck. Even if you have a portfolio, it's been 7 years, still the money is stuck. Company is sustaining, it became a lifestyle business for the founder, is not growing. It's okay, which is not the objective of investing, right? And for you also today, startup founders don't want to stick with one company. They want to build multiple companies. That means build a company, grow it, sell it, or acquire it, move to the next one. That's where the opportunity, especially engaged people want to do. Then no one wants to run a company for 10, 20 years. Of course, there could be some model that could become a next Facebook or a next Instagram, but otherwise, people have more opportunity. And today, technology is something like this, which will see the up or down in 18 months, because technology is changing fast, products are changing, problems are coming up in a different pace and all, right. You should be open for all these things. You have to consider quite a lot of things when you are building a startup and taking to like. So investors very particular, how am I going to get back my money? When I put this money, are they going to raise an X series A or a pre-series A so that I'm going to sell it? Or uh, will this company has such a amazing tech product and market that someone is going to acquire who are in the need? Because today acquisitions have become very common. The reason being is today it's buy versus build, right? People don't want to build any product, large companies, because it's a time taking and cost, not cost, time taking and resource. That's why they pay a premium and buy it off. That's a buy versus build. And other reason is today the competition, right? It's no more big beating the fast. Sorry, big beating the slow. So big beating the small. It's fast beating the slow. So being a large company doesn't mean that you can beat the small companies. No, it's someone who's taking the fast decision will beat the person who's taking the slow decisions. That's the entire dynamics of the market in how it has been changed. Keep these things in mind, right? How big companies will come to you because of your fastness, how fast you enter the market, how fast you are improvising your product, how you are showing you the growth metrics. That itself will impress any investor, and money will keep flowing. And once you achieve certain key critical mass metrics, whatever you call that, then showing that metric itself, the investor will directly jump, okay, I'm going to put this money. You won't even ask any more fundamental questions. That means you validated, you've proven it. That's why I say initially when you're going, go for a smaller rounds, prove it and do it. Even it fails, it doesn't pinch anyone, right? Investor also, okay, TK is written off, ho gaya. You also feel that I learned enough and you'll move on. So these all are very practical way of thinking and executing, right? Don't have a very standard template of running a startup. You build, you go to investor, raise huge money, run it. That's why many startups are failing. With the fact that today 90% of startups fail for the same reason, because people don't reflect or try to analyze where things are going wrong, or how they are analyzing the competition, the markets and all. Because of that gap, companies fail. They only think the way what do you say, what I think is right. That's why people think a feature ona, a feature ona, a feature be ona. But you're not realizing building those features, you're spending weeks and weeks of time burning the money, and at last when you look back, there's no money, your product is ready, you're running behind investors. Sometimes people also come request, please, I need money to grow. What if you don't get money? That means you're going to shut the business, right? Is that what you started the business all for? No, right? So all these things matters the most, and you need to keep in mind every aspect of the stage, right? From your business model, your team, your market opportunity, your competitor analysis, your key metrics, your revenue strategy, your uh, ask how much investment you raise, and exit strategy for the investors. There's 9 to 10 parameters. You have the answer to yourself. Then you have investor, right? You need not go. He will come to you. Just showing him a one-page summary of your metrics, what you have done. Trust me, investor will come to your office, sit with you, and will talk to you. You need not run, go to events, attend events, waste your time in taking the competition, pitch events, and all. No, just sit down, focus on this 10 things, and you need to have the answer. By knowing this, it will be known when you're talking to you guys only, that shown, that maturity is shown in you, that okay, you have done your homework well, you know what you're doing. right? This is what investors
Yeah.
look, and this is what you have to keep. I think ज़्यादा time ले लिया, ज़्यादा बात कर दी.
No. I think you hit on the nail. Great points. I just wanted to make it open for the audience also. So there are a lot of people who have already asked the question, but if you still want to ask, raise your hands. I will come to you. And I really like what you said, and this is what I keep on sharing with everyone. MVP does not make sense. It is, if there is no one to buy or pay for your product, which is MSP, minimum sellable product, there's no point of building. And I think you took it one step further, make it minimum lovable product, which is a great thing.
No, it's most lovable product. MLP is most lovable product.
Yeah, sorry, not minimum. मतलब startup के लिए तो थोड़ा बहुत ही कर लो, but yeah, most lovable product. Great. So I think मेरे पास भी एक question है, but उससे पहले there are a lot of, I think, easy question. Sandeep asked you, are you planning to invest in renewable sector, solar industry?
So typically, see, every investor or fund has their own philosophy and thesis, and there are sector-focused investors, right? So again, it's a learning from us. In the past 50K, we were sector agnostic, and that's where it's also a mistake, right? When we say a lot of startups focus on one thing, right? Same applies to investors. Focus on one sector. So you can justify, you can add value. That's why now the new fund, we are focusing only on SaaS. In SaaS, yes, renewal can be one of the industry. It's a SaaS as a model. So for example, there are new age, see, when you say renewable and solar, it sounds very heavy, very capital intensive or capital intensive or working, what is infrastructure intensive, right? It depends what is that. Are you doing in tech in the renewable? It matters. I won't say no, I'm open to listen, but it have to be some kind of subscription model that it will reach to the B2B or B2C segment.
Yeah. And I think, and this is my request to every investor, or every entrepreneur, the best thing is all the investors, including, let's say, Sanjay, they have made their thesis loud and clear on their website. You would know what their thesis is, in which sectors they are going to invest in. So on internet, you go and just Google, you will find who is the best investor. Anyway, so Satish runs, he's in healthcare industry and runs an offline to online business model. His question is, what's your opinion about crowdfunding? And are there any challenges faced to raising a money via crowdfunding?
So now even the crowdfunding models have become more matured. It was not like earlier, so many people will come on your cap table and doing. So the most popular site today is a VFunder, right? VFunder, the advantage they have is like you can raise even as low as $100 to $1,000 or little more. A good thing is only VFunder will come on your cap table. So they will represent all the investors. If that's the case, yes, it's the best way to raise, especially for an MVP.
Yeah. Thanks. Ashish asked, what is the best proposition for core team? 3 co-founders and 3 team members as a good team. Like, I think he's saying, like, are 2 co-founders, 4 co-founders, 3 core team members? What do you think? What is right? I think if that's the question, Ashish.
So it depends, right? So we invested in one company which had 6 co-founders. So 6 co-founders was extremely challenging. Later we realized, what have we done? Then 6 co-founders is extremely challenging because we are dealing with people, right? Kuch bhi ho sakta hai. Suddenly it happened, fear what we had, it happened after a year. One co-founder said like, मेरे घर में pressure आ गया शादी करने के लिए, I can't work in the startup anymore. Because of the other guy was also scared. Yes, I'm also not making money. If I go to the market and work, I'll make a premium salary. Then these people walk away with the equity, right? And other guys, it's a mess. Then immediately we realized and we created a restructure of bringing a founder pool, and it took a lot of time. But see, you don't need so many people, right? It's always have that every co-founder should come with a unique strength, not that everyone is doing coding, everyone is doing sales thing. It have to be the combination. That's why you take people who you know or who you find with a combinational or a complementary skills that will make. Sometimes in my startup, like we recently made one of our team member as a co-founder. That's always a good opportunity, right? You hire someone and they're performing extremely good and you want to retain, make them a co-founder. Unko bhi acha hai, you will also feel good that they have taken responsibility. So it varies ways. Not necessary that you should have co-founder initially. You identify team members, let them work for an year, then they could be a potential co-founder and elevate them. So, but when you bring in co-founders, complementing skills matters the most.
Thanks. Seema runs a company known as Tarini. which is it's a sustainable fashion startup and largely impacting and providing the opportunity to the rural people. So the question is, does that excite you? It's a sustainable fashion firm, or are there any venture firms which get excited if they are focused and providing rural livelihood?
Yeah. So again, let me tell this. So when I talk to startups, I don't exactly look what suits to me, because being in the industry, we built an amazing network with a lot of other investors, other industries and all, right? I'm always happy and open to connect to some other synergetic partners, not necessarily investors where you feel I can definitely guide. The knowledge information is there, I'm willing to share that. When you ask particular to investment, it may not fit to our thesis. So it will be no from Sahasra, but I can help to some other, connect you to some other investors who will look at even such kind of models. There are a lot of social venture funds, right? Like Sama Capital, Will Grow. They'll be interested in that. But at what scale they look at, I can give you a guidance. At least I can make an introduction. That attempt I can do.
Great. So Manoj, do you have a question? You have raised a hand.
Yes, sir.
Yeah.
Yes, sir. Hi, Sanjay sir. Good evening.
Good evening.
See, I have a question on the part you emphasized on team, right, sir? Now, I have a question like, since we are into venture of, senior care, like, we are providing all kind of services, doorstep services for all the seniors, right? So we have started our project in Kolkata, West Bengal. Now,
What's
my
your startup
question,
name?
my startup is Nest Care Tech Private Limited by the brand name
Nest Care.
Nest Care, yeah.
Okay.
So just commercial launch has happened this month only. Okay,
Mhm.
so now I have a question like on this part on team. So whom do you prefer? Like the co-founder having let's say 15, 16 years of corporate exposure along with 3-4 years of entrepreneurial journey. This is one set, and second set being an entrepreneur who is maybe just coming into the field of maybe being an entrepreneur, like in the just he is trying or he is planning to be an entrepreneur. So if like I come to you with my professional exposure or maybe 16 17 years of corporate journey along with 3-4 years of entrepreneurial journey, you'll prefer me, or will you prefer someone who is having some sort of experience in this field?
You're asking me who do I prefer?
Yeah, yes.
So I don't prefer either of them.
Since okay.
See, the reason is, I think it's a wrong approach.
Mhm.
So when you are trying to find a partner, right, it's very much important. First, if you
Mhm.
understand your business, you should know who are you bringing. It could be from corporate. Sometimes you don't even need people from such a big branch also, right? What is the value they're bringing onto the table? Can this guy help me grow my business? So again, coming to the little fundamentals, what is your vision, right? Can you translate your vision to the person and can you reciprocate? So you should have that feel. I'll always put this best example is, right. So when you're getting into relation, right, when you want to marry your spouse, if you're not married or if you're married, you think a lot, right? Compatibilities, you think about the future, exactly same, because a co-founder is someone is no less than being part of your family or part of your life. And actually you spend more time with your co-founder than your spouse. That means there are more chances for you to disagree, more chances for you to debate, more chances for you to have a difference of opinion. So you need to exactly look when you're in the initial relation, how do you date and to find the person's nature. Exactly same thing you have to do, because you both are getting into relationship to build something together. So I won't say if someone coming from a Google or someone is coming from a startup, whom should I take? Not looking at the brand. And most of the time, people get carried away with the big brands, but people are never having experience in running a startup, or they may not even know the ground reality. So you need to put them into the test, stress test, all kinds of tests where you feel and convinced that, okay, this guy is the guy will be suitable for my kind of company culture and everything, not just only doing. So you should put in questionnaire, right? Again, check what qualities are you looking in the person who have to be your co-founder. To be simple, like knowledgeable, little better than me, having a skills which I don't have. All these things you need to look at, and it's an interviewing process, right? You interview them, and it's always you can say no to them. You can always say no. Don't get hesitate. I'll try. because it's a very important aspect. The person, if you taking a wrong hire, wrong co-founder, gone. You are messing up your entire business, your entire vision, right? So it's extremely important the way you choose. Sometimes I say when I invest in companies, I spend a lot of time with my potential investee portfolio founders. I go to their home, I'll have lunches, dinners. I'll also observe how are they behaving with their spouse, how much time they're spending with their kids, how are they with their parents. This all matters to me. This all personal side also matters to me, because when I'm putting money in someone, I need an overall personality characteristics of individual. I don't want what is showing me in the pitch deck, what is showing me in front. I also want to know his background. So I spend. That's why we don't do any investments hurriedly. We don't take decisions fast. I want multiple meetings. I visit their home. I visit their office. I want to see their family members. That gives me a lot of insight. Same thing. You need to spend time. You should do the dating with them. Whoever it is, that's very important, right? So in that dating, you don't like it, you say no, move to other person until you find the right guy. That's the only way to find the right people.
So I think, yeah,
Okay.
there are a lot of other questions on co-founder also. But very quickly, if you can answer, I think Seema also asked and Anurag also asked. The question largely is, the single founder, does that impact, or do you need to have a team, or how does the investor view a single founder?
So single founder definitely after a stage actually. So as investors is a concern. When you're small, it doesn't matter, but when you grow, single founder cannot handle it, because especially when you're looking to raise money, fundraising itself is an task. A lot of time need to be spent in raising money, and you running your business, your operations, managing your teams and raising money. It's impossible. You have to be a superman, a superhuman woman to do that. So even we regret sometimes in two of our portfolio, we invested in single founders. Luckily, both are doing okay, nothing wrong. But if there would have been another complementing co-founder, it would have been amazing and wonders. So definitely, we'll say sometimes single founder, everything is good. Go and find a co-founder, then we'll consider. So it's always good to have a co-founder. If not right away, in the growth stage, at least you can always bring. Not necessarily day one you should have a co-founder, but when you're approaching for a funding or once in a growth stage, it's must to have, because of your who can take some of your tasks.
Great, thanks, British.
Yes, sir. We are. My startup name is otomo.com. We are omnichannel marketplace and in apparel and retail tech in unorganized apparel retail. Okay. My question is, I will carry forward the team question. So I guess the thing is to bring a co-founder is getting an arranged marriage, is getting a love marriage, not an arranged marriage. Okay. So my approach is right now to whether to that to go for a finding a co-founder. I am bringing team normal people, not many advanced in their professions. Just like we say in Hindi कि हमें तो धंधा करना है, रेवेन्यू लेके आना है, चाहे वो किसी भी धंधे से लेके आऊं. तो मेरे को इनिशियल आफ्टर गेटिंग एन इनिशियल इन्वेस्ट रेवेन्यू, then I go to a investor. So is it the right approach? Investor will take me for funding or not? This is my approach right now. Yeah, I'll just have to do revenue.
Yeah. तो मैं पहले भी आपको बताया था, investor doesn't will only look at what was the growth you have shown, what best product you have built. आपने पहले जो मेहनत करके एक स्टेज पे लेके आया ना, वही देखे कैसे आया, and that will happen only because you have the right team members. If you have the motivating team members, आप बोल रहे कि मैं कैसे भी लोग को लेके आऊंगा, what if they are not meeting your expectations? What if they are unable to work towards your vision? So I'll say simple, when you're hiring even a team member, right? So again, I do this very common practice and exercise with most of my portfolio companies after investing. When I interview all the team members separately, right? All the team members should talk the vision of the company and vision of the founder. That means founder need to first translate the vision in them. Why are you joining my startup? What are you looking at? How are you going to grow? What is our vision? And the same vision of all the team members should talk the same when it comes to the company vision. ऐसा नहीं है कि हमको पैसा अच्छा मिल रहा है या पे अच्छा interesting job है, I'm here to learn. Gone. They are not the right people. Someone talks your blueprint, they are the right people. So that's happened. I test this. So if an employee is unable to understand what the company's vision is, what the founder's blueprint is, then he's a wrong hire. He won't contribute for long. Someone pays him 5,000 more, he will jump there. So that's why the crucial part of any startup is a team. Finding the team, see, building product is easy. I will say easiest thing is building a product. Finding the good team is the toughest thing. That's where it takes. And as I said, investment comes looking at the people, not looking at the product or other things. So you have to put lot of time, efforts to hire them. Don't get excited because someone came from a big brand. Don't get excited because someone talked well on the resume. You have to interview them. You have to spend lot of time. अगर टेक्निकल वाला है तो उनको समझना चाहिए कि उनको कितना नॉलेज है. Is he the right guy? Can he also pivot if required tomorrow? Can he mitigate certain risks? ऐसे देखना पड़ेगा.
Sanjay, there are a lot of questions. I'll just pick last three. So I think these two you should be able to answer quickly. Prop tech. Is there a market? Do you think there's a scope?
So it depends, right? Again, prop tech has a various thing. It could be on the technology front. It could be on the hardware front. It could be various things, right? And obviously, proper tech is something still very nascent stage. There's a huge opportunity in that segment. If you see the companies like JLL, CBRE have set up their own funds to invest only in prop tech companies. There's a very popular accelerator in Bangalore called Brigade Read, started by a Brigade company. Reads. They only incubate prop tech companies and help them. So obviously, the market size is slightly different and unique. It's all B2B over there, right? So it all depends on what kind of product are you offering in the product segment. Opportunity do exist for sure.
Automobile focused, startup focused, it's largely B2B2C or B2C. And it's a platform where it's a servicing platform.
So if you see Go Mechanic is one and who raised a lot of money and all. But again, it's a slightly, difficult market to crack because you are dealing with a very ground level people. Again, it depends who's your target group, right? And such kind of business are slightly capital intensive model because your acquisition cost, because you need to have the fleet on ground fleet people who go and onboard people and all, right? So that needs a slightly different level of maturity in terms of the model. So I can't comment much without knowing what model is this. But yes, today, if you see, there's so many ventures in automobile marketplaces, hybrid, hyperlocal have come up. So interestingly, recently, one company came to me. I like that, but I didn't spend more time in understanding the market. What they do is today, they have a professional car cleaners. So they train these people on cleaning a car with a specific cloth, specific chemical, specific composition, and with a uniform. And here they only charge 20% on his income. So if you see, you take a gated community, there'll be at least around 200-300 cars. So if you see the market opportunity huge, but again, it's a very intense model because people dependent. So people dependent models have a different hurdles and all, right? Sometimes the model looks very exciting, big, but when the dependency with the people, then the challenges come. So you need to assess very depthly what the competitors, how are they cracked it, how are they initially done it. So that's how you have to work. But obviously, anything consumer related product always have a market because India being the largest population, opportunity is always there to explore, and you'll have all kinds of customers for various solutions. Only thing is how do you streamline and how do you position it matters.
Great. Second last question. So we should focus on product and create a great product experience, acquire customers, retain them, or should we focus on the revenue also from day one? So that's the question.
So both are hand in hand, right? So if you create the best customer experience, that's where even the revenue, people pay more for experience, right? So you can charge a premium because of the experience. So today, if you see, certain apps are there, though they're competitors, you go to one particular app because of the experience, and you don't mind paying little more because of the experience, and that will definitely increase your top line. So yes, you have to invest more on the experience. It could be your user experience, it could be your customer experience, whatever it be.
Last question, issue.
Good evening, Sanjay sir. My name is Ishu Bindal and I'm co-founder at Plantish. At Plantish, we are working on plant-based egg alternatives, and more precisely, we are making plant-based egg that is healthy, safe, and sustainable without compromising on its taste, price, and convenience. We are at very early stage and we are developing the product. I have three questions for you. First, I want to understand, do 50K Ventures invest in pre-seed investments as well, like before the MVP is ready at the prototype stage? Second, as you were talking about that you have invested in food companies, so do you also consider food tech proper product companies? And third question is, as you were talking about the smart money, like it's not only the investment, but what investors other things can give. So how 50K can help startups? Like what kind of relationship do 50K maintains with the startups? Thank you.
See, first one, not only we, most of the people don't invest on ideas because the risk is much more higher. So until unless the product or service is not validated, it doesn't make any sense to invest. Until unless the best way is you have to go to your family and friends to approach them to raise that seed capital in the idea who believes in you, and then you can come to the professional institutions. Second, the Evolve snacks happened because I was a foodie and I used to enjoy all these buy the snacks, and after this kind of emotional connect, that's why I pushed my team, and I personally also invested in that company. That's why it happened in that way, and that gave me a great learning and experience about this D2C market and food market and all. Because the knowledge is there, I don't mind looking at more deals. Maybe not through 50K, but personal capacity, I may do it. What was the third question?
You were talking about the, like, it's not only the money, but also what other things that...
So honestly, because see, with the kind of stage where we are, we have to be choosy in putting our energy also, right? Even to spend a time with a startup, a lot of energy is consumed, and there have to be some outcome. Spending few minutes like this sessions and all sharing knowledge is fine, but spending more time, because end of the day, it's again a business for you and for us. We cannot keep wasting time on discussing ideas and having an discussions, right? If something potential, something useful be there. Otherwise, as I said, if you share something, we can connect to the right people. Just an email introduction or something happens. But there also we should feel good about your model, and we see that it is there. Yeah, it's always there to encourage, but don't expect someone giving too much of time in mentoring and other thing. Which is, if it doesn't suits our interest, we don't do that.
Great, thanks. So Sanjay, how can people reach out to you? Is LinkedIn a great way, or is there an email ID where they can reach out to you if they want to share?
So LinkedIn, always you can be in touch and know about certain updates what we give. And my request is, again, don't share the pitch decks until unless you have answers to all those things. As I said,
Yeah.
when even whenever in future Ankur puts you for investor, you should also ask certain questions about to Ankur that he's the right investor, is he know about what. So it's very important to choose investor also. Don't think that someone has money, you need to go. A lot of cases, startups suffered because of wrong investor. So it's always mutual. How investors choose the right startups, even startups should choose the right investor and go beyond value-based investor, not investor with money. That's very important. So I'm sure Ankur will curate and bring the right kind of investors. But when you have an opportunity, you need to wait that. Don't jump, because investors always look for good deals. Good. When you're ready, then only you go. Don't go without preparation. Don't go without much of your having idea. If you have, don't even waste your time.
Great.
Yeah, LinkedIn
Thanks
is the
a
best
lot.
thing. Sanjay Enshetty is a LinkedIn. You can be, because I'm more responsive on LinkedIn than email or